Now, a viewer has sent in the question asking, what is your opinion on arbitrage funds as fixed income investment?
These arbitrage funds are a very interesting avenue. It has arbitrage funds, by its very character, the way they are designed, they give you fixed income kind of return. But from a taxation point of view, from a legal definition point of view, the way these are structured, they are treated as equity fund. So you get the tax treatment of equity, which is concessional, 12.5% for 1 year and more longer holding, and 20% on short-term capital gains. And similar thing is not available for fixed income, and fixed income has become far more painful in terms of tax. So here you are able to get a fixed income avenue. The problem is that the best performing arbitrage avenue available will get you returns somewhat like a liquid fund. You are unlikely to, and more so with the emergence of more such options. The balanced advantage are now coming out. Many debt fund categories are coming with the dominance of this arbitrage opportunity, which is lowering the return. And for these arbitrage funds to survive and thrive and be rewarding, there must be enough arbitrage. The problem of arbitrage is that it is self-cannibalizing. Let me just explain you with an example. Like, you have something available for 100 rupees, while in the cash market is available for 88 rupees or 95 rupees. Somebody will buy one of these either to wait or sell it instantly to realize pocket the gain. It can happen during the day, it can happen over the week, it can happen on a settlement. And more so with emergence of this arbitrage fund, they get becoming bigger. Other kind of categories also stuffing up, allocating to arbitrage avenues. These returns will come down. They will even go down lower than liquid fund. But if the return lower than liquid fund plus the tax advantage makes sense, then go for it. The other thing is that there is a natural advantage of mutual fund, is that you get for any other fixed income avenue comes with a term, a deposit for 30 days, 45 days, 1 month, 3 months. But in case of mutual fund, you get the return for as many days as are you invested. If you are invested for 43 days, you get that return. And I don't think they have any meaningful downside. So go for that convenience. The money available on demand, getting return for as many days as are you invested, and decent tax treatment, and that's about it. But don't expect the kind of return that you are witnessing now. Lower your expectation from arbitrage fund.